Hey, what's going on, everybody? Hope you're doing well. Lamont here again, covering again. Still no internet in Nashville, I think. But I do think Lori will be back next week. So hopefully, you're not getting too sick of me yet. Anyway, let's get into it. So, another notable failure today for the SPY sellers to not touch down on this 565.16 level. That's the prior all-time high. So again, as long as the buyers are holding over the prior all-time high, then things are doing fine. Just like the video discussed yesterday, we're pretty much just balancing, right? We're still hanging out in this local daily range, no meaningful change without acceptance back under 565.16, or of course breaking into new all-time highs, right? So either this structure will either we'll break out of this structure and it'll be affirmed as demand, or we'll break down from this structure and it will be affirmed as supply, and then we'll be looking back down at backtest of this 819 to 830 structure. Consolidation would still be healthy as long as we're holding over where all of this value was created, right? Because in order, from a volume profile perspective, in order for the sellers to recapture the trend, they have to leave supply behind, but also break down through key demand. So it's not it's not one or the other. It has to be both, right? For example, when you break down over here, okay, you've left overhead supply, but did you trade through the next demand zone? You didn't, right? And so this trend was fine, despite this being a pretty notable retracement, okay? So that is it. We have data Thursday and Friday likely to bring volatility. So we have jobs data on both Thursday and Friday. So the initial reaction tomorrow, it might not stick heading into Friday state. So, more patient operator, just waiting until after Friday to do anything more meaningfully. Otherwise, you're just playing responsive trade. Responsive trade is still very reasonable because we're just balancing within this range. So responsive trade is really just waiting for a potential of a one side of the range to break and then fail, or to even fail to break. You're just basically looking to fade test of either side. All right. So that's it. Moving on to the cues here. Let me just get this out of the way. All right. So, actually, I'm on the wrong chart here. Okay. So for the cues, same deal, right? It's balancing as well, but instead of this balance, it doesn't really look as clean as the SPY, right? SPY is very much just pretty much sideways trade, right? We're just going sideways in the SPY. The Qs, you have a little bit more volatility, and that's because we don't have the same references, right? We're not balancing over a prior all-time high right now. We're balancing under the backtest, rather over the backtest of this prior supply now acting as demand, and under this supply, right? So no change on this chart relative to all of this trade, as long as we're holding over this guy and under this guy. So again, volatility tomorrow and Friday likely to, it's more likely that we'll come out with a more high conviction move in the market after that data is released, because that's uncertainty. Although, again, we also have election uncertainty. So I'm personally buckling up and preparing for a pretty choppy October into the election. After the election uncertainty is over, I would not be surprised if the market has a bit more confidence moving after that. Okay, because then, again, it's not about whatever Dems or Republicans. That's not really what the market cares about. The market cares about certainty, right? So right now, because we don't really know what kind of economic policy the next sitting president is going to enact, market doesn't love that, right? But as soon as we do know that, then people will have a little bit more confidence, right? So for example, like private prisons was a play that Dan was looking for, right? If Trump was to win, right? Because he's much more in support of private prisons than the Democrats are, right? And so, you see what I'm saying, right? Like with that certainty, once we know, okay, this person's going to be in power, that has implications on this market, which has implications on this market, whatever. So for now, that uncertainty is likely to create some more back and forth action, less conviction in all of these moves. So that's pretty much it. For the cues, there's no change relative to yesterday. We just had an inside bar, So again, we're just looking for this to just trade sideways for a bit here, And that's pretty much it. Like I know that you had a few days of pretty notable selling, but we're only 2%, 3% off of the highs right now. So it's really nothing. IWM. So IWM, another pop and drop over here, or rather drop and pop at the point of control of this guy over here. That's this structure over here. Again, no change, right? Because we're pretty much just an inside bar. We did break the regular trading hours low by a smidge, saw no follow through, and then moved back into yesterday's balance. If you look at this from a session to session perspective, really there was no change, right? From a value area perspective, today's value area in the ES is completely within yesterday's value area, right? You have to give the slight edge to the buyers because they held over the open and they prevented a test of the value area low, whereas the value area high was tested. For the NQ, very similar, mostly. It's a little bit better in the NQ, where the majority of the session was not only over the open and prevented backtest of the open, right? Here, the ES got back to the open, the ES, the SPY got back to the open, the NQ, the QQQ did not get back to the open, right? So slight bulls, buyers are slightly stronger in the NQ compared to the ES, right? And also, that's pretty much it. For the RUT, it's much more balanced. The balance was completely within yesterday's value area as well. We tested the value area low, we tested the value area high, another value area high test, a value area low test, but also fairly to get back to the open. So slight edge to the buyers here from a day time frame reference perspective, but value completely overlapping. Okay. That's pretty much it. So for IWM, then I'm still just looking for balance over this point of control, right? As long as we are finding acceptance over 217.38, then this structure is being affirmed as demand. Okay. So that's pretty much it for IWM. Bitcoin. Nope. Hold on, I gotta change charts here. So Bitcoin. I'm just watching this cat. He just got neutered, so he's being weird. That's why I got all these cushions over here so he doesn't have to jump anywhere, because, yeah, the vet said not to let him jump. I don't really know how you're supposed to prevent a cat from jumping. If you know, let me know in the comments below, I guess. But so far, he's jumped on a bunch of things. So just making sure he doesn't have to jump too far, at least. Anyway, so remember what we were talking about yesterday, right? Yesterday for Bitcoin, we were saying, okay, well, the 4 hour, the hourly was extended coming into a test of this key point of control. So if you were to see a break, no follow through, pass back over it, you can buy that pass back over, throw your stop under the low, and chop it up where? No later than the 62380.55 level. So if you did that, you know, a little bit of a chop and stop play for you there, right? You probably walked away to break even or slightly green trade, and that's fine, right? We're never going to know if the trade is going to work out. What we do want to be very confident in is our location, right? And our timing based on extension, right? Based on the context of the trade, you know, are the buyers or sellers extended coming into our location? That's going to increase the odds that we can fade that move and then take our risk out of the equation, assuming we front loaded it, and then see what the market will do with the runners, because we never know what's going to happen, right? And so if you front load your risk, and then you do get that reaction at the location, you know, it's a very common practice. It's definitely easier psychologically. Take your risk out of the equation and then let the rest of the position do its thing and see what it can get done. So as of right now, this break under the point of control, no follow through, and then another lower low lacking follow through. So I don't love the context as much anymore for that pass back over play. But if we were to continue to balance like this, right? So if, let's say that we continue to do this, and just trade alongside in here, and then you fall, like you break over here and then fall back down here again and get things extended again, all right, then that's fine for a range bound play, right? You're just looking to bottom fish off of this local range, knowing that the lower time frame, like the hour up to the hourly, is extended, then that would be a reasonable place to be looking for bottom fishing as well. It might have been oversold again here. No, it wasn't over here, but that's the idea. Like you want it to fall from a pretty high space to continue to look for similar plays off of this major level, this point of control. And that's really it. So goal for the buyers is to not come down to this value area low, 59456.25. That's the objective for the sellers right now. And to find acceptance back over 61003.36 in order to affirm this prior all-time high structure as demand. And then of course we got to get back over 62380.55, where we suggested you take some profits to protect your position in order to negate the change of this breakdown. Okay, that's pretty much it. Moving on to gold. So gold, super healthy consolidation, lower time frame operators. You can be using this guy over here, this structure over here that, is just an hourly structure here. And so as long as this guy is holding as demand, well, then all of this consolidation is healthy. So a longer time frame operator, you play on the daily plus, then you're still looking at this area for trade. But if you're a lower time frame operator, a bit more aggressive, then you're looking at failures to come through this local area of demand, looking for a responsive trade within here. So this consolidation on the hourly time frame is healthy as long as we're holding over this demand zone. Point of control is at 2652.4. And on the daily time frame, I would say this consolidation is healthy as long as we're holding over this area where a lot of prior demand was established, roughly at 2544.2. I guess we could mark it up here. That's almost perfect. Doesn't even need adjusting, really. Okay, so that point of control is at 2544.3. As long as these buyers are holding over here, then we don't come into this much larger area of demand. Like these demand zones are meaningful, right, on the lower time frames, but this is much more meaningful because it's acting as a gateway into all of this over here, So that's pretty much it for gold. Oil, very little change as well, right? We higher high, not really seeing that much follow through right now. So the another pop and drop over here at this key resistance level. It's a daily no change level, and this local demand, prior demand, now acting as supply point of control. We're just looking for more balance, right? So the potential of another look above and fail here. If this is going to follow through tomorrow, we should see weakness and then come test these lows to stay within this balance. All right, and that is pretty much it for oil here. Yep, that's really it. I don't really care about the 4-hour trend. It's not going to be too helpful right now because the bigger picture, we are just balancing here. So that's really it for oil. Moving on to nat gas. So nat gas, a pop and drop. So again, like this, with things so extended, we're not really expecting a lot of follow through on this. Obviously, nat gas can do whatever asset can do whatever it wants, but the higher time frame RSI is already getting kind of hot. So such that if we were to pop over this resistance level, I wouldn't be surprised if we were to see some initial retracement first. And it's really all about holding this guy, right? The value buys are all the way down here. As you can see, this guy over here is pretty much the gateway. We could also use this structure. They're going to probably tell you a very similar story. But this is essentially the gateway into this demand zone, right? And if we hold over this demand zone, then we should expect price action like this. So I would say hourly extension, 4-hour extension into this zone is a very reasonable location to be looking for plays. Just looking for responsive trade to hold over this guy and then look for another test of this guy, which of course the key test is over here. But I believe each one of these has reasonable R. All right. So basically, like if you divide it into 3 parts, like this would be your lower fill risk, right? 1.42% to try to get to 17%. This would be your middle fill, right? You're risking 5% to try to get to 19. And then here is your top fill here, right? This is risking 9% to try to get to 5.73. So if you took all of these, it would average out to that original zone like that. Well, it would be this middle one roughly. All right, and then finally for the dollar here, again, continuing to maintain the plays are off of this guy, right? This guy over here, this demand zone has contained price ever since 2022. This supply zone has contained price since 2022. So no change relative to all of this trade ever since 2022 without either acceptance over supply or acceptance under demand. So, this trade zone was shared in the weekend video back in August, I believe. So again, if you're interested in that, just check out the chat room. Trades are shared all the time. Trade zones are explained all the time. Tactics are explained all the time. Links in the description below. You know the deal, I imagine. If not, well, it's there. So that's pretty much it. Essentially like a bit of an inverse head and shoulders here. So again, this daily no change level was really the key. 101.965. All of these bounces, no matter how notable they are, despite the fact that the sellers are failing to come down to this point of control, which are notable failures, they don't negate the change of this breakdown without acceptance back over 101.965. So I continue to maintain that if you are a dollar operator, that buys are reasonable off of this guy because, well, again, traders do what works until it doesn't. But these buyers, any buyers down here, you're not out of the woods yet unless you get back over 101.965. Doing so would greatly increase the odds that we come test the high of this supply zone, just like what happened over here, right? Once you clear this area, back test it, test the supply, all right? That's just what happens. If you hold down here, test supply, hold down here, test supply, fail, hold down here, test supply, hold down here, test supply. So if we hold down here, what should we expect? We should expect to test supply. That's just what balance looks like. Okay, so that's it. And if you took any trade down here using this trade zone, you want to be considering peeling it out sometime before 101.965 because the market has already told you these buyers are struggling to get up there. Obviously, the context is now different, right? These buyers over here are different than these buyers over here, of course, or at least slightly different. At least some of these buyers might still be in there, but it's different context, right? So ideally, you'd be looking to peel out before 101.965. So that is it. I appreciate you guys tuning in. Hopefully we'll get our team, back to full strength sooner rather than later. Lori is due back next week. And Funko just got a new chainsaw that's pretty beefy, so we might not see him for months. And I think Daniel still has a bunch of yard work to do, so we shall see. But not yard work, but, fixing his property, which, got kind of mangled. But hopefully they get their service back soon. Otherwise, maybe you'll see me one more time. I don't know. But again, I appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. If you wouldn't mind leaving us with a like and subscribe, that would be great. Helps us out a lot. Costs you nothing. And that's it. Farewell.